Good morning, everybody, and welcome to our second day of TDK Ventures Energy Week 2022. It's a pleasure to have everyone here. This is going to be another energy-filled session. I can feel it. Excited to kick off another action-packed day with everyone. This is our virtual forum that we've been hosting for cross-disciplinary discussions about the innovations needed to combat climate change and achieve a successful energy transition. This event is hosted by none other than us, your friendly local deep tech investors at TDK Ventures, and we are the corporate venture capital arm of the Japanese electronics giant TDK Corporation. My name is Mark Boucher, and I'll be the host of this morning's exciting spotlight interview. A quick bit about me before we hear from our exceptional guests. I'm an associate on the investments team here at TDK Ventures, focusing on energy and health tech investments. I have a diverse background spanning aerospace engineering, offshore sailing, and now deep tech venture capital investing. Please note that this spotlight discussion is just one of a few sessions that we're hosting today, and please find the full schedule on our event page here. If you just Google TDK Ventures Energy Week 2022, it should show up. You can also go to the full schedule if you're already logged into the platform and join us for more great discussions later in the day. Now, I'm very, very pleased to bring our guest on stage, Rick Needham. It's truly a joy to introduce you to our guest for the next hour or so. Rick has a career spanning a number of notable positions, most recently kicking off a new role as Chief Commercial Officer at the fusion startup Commonwealth Fusion Systems. I'll let him touch on it, but I imagine that this is a full circle moment for Rick, who also studied nuclear engineering and served on a nuclear submarine at the beginning of his career. Rick also held the role of Director of Energy and Sustainability at Google, leading billions of dollars of commitment to renewable energies for the company. Prior to that, Rick was a VP at Deca R&D, working across a number of technical projects. It's really rare to speak with someone whose career has touched on so many aspects of energy technology at so many levels. I'm truly looking forward to this conversation. Rick, how's it going? And I guess first question, did I miss anything in that intro?
I'm super excited to be in my new role. I don't think you missed anything in the intro. We can go into more detail on some of the things I've done in the past, but super excited to be here and appreciate the invite.
For sure, for sure. I think we can just get right into it then. We definitely might have to stretch the theme of the discussion today, which was meant to be around emerging market electrification. I think we'll definitely touch on that, but I think we'll open the aperture and go on to a number of different topics. So definitely want to just give a little bit of space to talk about what you're up to with Commonwealth Fusion Systems, given that the news is kind of hot off the press. Can you give us a brief overview of Commonwealth and your role at the company now?
Yeah, happy to. So, the Commonwealth Fusion Systems is the leading fusion company in the space trying to commercialize fusion power, fusion energy. It's doing it on the basis of decades of work that have been going into, I'd say, the most characterized form of fusion reactors, which is tokamak type style reactor. A lot of work has been going into that, but leveraging this new innovation, this very high power, high temperature superconducting magnet that basically allows us to shrink down the size of what a tokamak would have to be relevant for commercial installation and to start deploying that. It's spun out of MIT. It's got a long history of high field magnetics as well as fusion with the Plasma Science Fusion Center based out of MIT. It's got a great team of folks who come from all disciplines and some companies that people would be familiar with, like SpaceX and Tesla, who have built some amazing first of a kind things. So I'm super excited to join. Just so you know, the intention of the company is actually to build the first fusion device that's showing net positive energy. And that is intended to be happening by like 2025 in the short term. People have always said fusion's so far away. And one of the key milestones for fusion to achieve is net energy gain. So basically getting more energy out of a reaction versus the energy you put in. Once you've crossed that threshold, you really are showing that this is a viable path to creating more heat energy, and therefore you can build a power plant based off of that. So super excited to be involved in the effort. And I think we'll talk more about my transition and career and things like that, but I'm super excited to be part of Commonwealth.
Yeah, fusion obviously has been more and more in the news and sounds like for good reason. Sounds like there are a number of advancements on the Commonwealth side that probably make it the right time to even think about commercializing the technology. I feel like that's something that's a new flavor for fusion tech. I think maybe another question just in terms of the journey that you've had, I'm wondering how did the transition into this role happen and what's it been like moving from TPG Rise, where my understanding was it was much more investment focused and now back into an operating role?
It's a great question, and it's one I'd been thinking about obviously over the last several months as I was transitioning roles. The last 5 years, for those who don't know, I was involved in investing in, I'd say, late stage growth, early private equity into climate and energy. So I joined TPG about 5 years ago to lead the energy sector for what was at the time the largest impact fund that had ever been raised, TPG's Rise Fund, which was just over 2 billion when it was raised. TPG is now onto its third Rise Fund. We raised the Rise Climate Fund last year. That fund alone is over 7 billion. So these are big funds that would do large scale investing. So I'd say ticket sizes range from 50 to 150 million in the first Rise Fund. And now with Rise Climate, they're targeting even larger ticket sizes than that. But one of the things that I came to realize is that I'm most drawn to companies that are a bit more inflection points. So those are companies that, with my more technical background versus long investing background, I've just been most interested in those kinds of companies. So they may have still some technical risk. They may have not yet proven out fully what they're doing. They may not be profitable and generating EBITDA. Those are the companies that would be harder for a private equity fund to invest in with that risk. And just that's what we've told our investors, our LPs, what we were going to invest in. We weren't going to invest in a lot of things that had technical risk. So what I did then is then transitioned out and thought about perhaps investing a little bit earlier stage than what TPG could do. But I don't change jobs very often. So I figured I'd keep my aperture open and consider operating roles for the right one.
Hmm.
And I would say my personal criteria for any operating role, I had to personally feel like the company had a really significant chance, high potential to bend the curve on climate, even by itself. There are a ton of great companies out there across all these sectors. We'll probably talk about some of them, but this is the one I just kept coming back to Commonwealth Fusion Systems as I can't think of another company that is in a position to dramatically bend the curve on climate, not just by decarbonizing the power sector, incredibly important, but really enabling the decarbonization across many other sectors, ones that will depend on affordable, abundant, low cost, zero carbon power and heat. So I just kept coming back. I couldn't think of something more important. And the team is fantastic. They've already shown that they can hit real amazing technical milestones, proving out the most powerful magnet in the world on their path to making smaller tokamaks that are actually commercially viable. But the transition was a different role than investing. Investing, I really loved the wide variety. As probably most investors, the ability to look across sectors. And so I'm kind of buying in with both my feet, jumping with both feet and voting with my feet. This is the one I think is really critically important. So I figured I'll do what I can to help this company realize its potential.
Totally fair. Feel like there's probably a good quote about investing your time rather than your money, and this is probably the biggest investment you could make with going with Commonwealth. So definitely appreciate the explanation of the journey there. And maybe before we get more specifically into energy technologies and talking about some of the approaches, getting at the theme of the session, I'm also curious to just touch again on TPG. We rarely hear about these funds that are truly late stage, multi billion dollar funds. And I'm wondering, can you give us a sense of where TPG is positioned in the journey of a startup founder between funds like TDK Ventures and some of our colleagues at funds like Lux and Lower Carbon, who we had on yesterday. And then on the other end, probably people like Jiggershot, the DOE LPO, who we'll be speaking with tomorrow. Where do you see TPG Rise and the work you were doing there fitting into that journey?
Yeah, it's a great question. There's a spectrum, and I imagine if you have CEOs and management teams listening in, there's a spectrum of sources of capital depending on where you are in your journey as a company. I would say TPG Rise and Rise Climate are going to be later stage investors on that journey. So they're not the ideal investor when you're still trying to prove out a product or a service and you don't yet have customers, or maybe you have one or two and you're piloting things. They're not really set up to do that kind of investing. But if you've already gotten some product market fit, you've kind of proved out what it is that you want to build, and you need help to scale that. You may be pulling in revenue already. In some cases, at least for the Rise Fund and Rise Climate Fund, a profitable business. That's the place where they can really help a company scale and scale dramatically. So, what does that mean? That means going into other geographies. That means extending a product line. That means helping with sales force effectiveness. That means raising additional capital, even going public. TPG's probably helps more companies go public than any other entity. It's all those things that can help a company go from, I'd say, later stage to like mega stage. That's exactly where TPG fits best. There's an incredibly important part of the ecosystem that gets companies from an idea to a seed stage to a Series A. Obviously, TDK and others are helping to do that.
Yeah, I think it almost feels like there's like a little bit of discomfort in specifically in the energy and climate space where there are companies that kind of desperately need to be at that mega stage already, but with
Mhm.
technologies that funds like TPG Rise might not feel comfortable investing in like a first of a kind type of a deployment. Is that when you're looking for other kind of late stage but still more risk on type of VC investors to come in before TPG?
Mark, you bring up the great conundrum, I suppose, of the space, and people call it a valley of death. It's a valley of financing or valley of proof. This first of a kind is very difficult, especially in this space. There's this annoying thing where you have to run up against the immutable laws of physics, right? You can't just make an app and then try a B test and figure out this is the way to go. You don't have to prove that materials or things happen in reactions. What I would say, there's a few things that companies might be able to do to help get to that first of a kind deployment. First off, it's tough. There aren't many investors who like putting in big dollars when the risk is still high and the chance for a solid return for what they're looking for their investors is there. I would say de-risk as much as you can and focus on the thing that would be most enabling for the next step. I think Commonwealth is a great example of this, right? When they looked at how would you actually build a commercial fusion reactor? Well, it'd have to be a lot smaller. It'd have to be really high powered magnet. That's something that you can leverage. The power of the fusion reaction is to the fourth power of the magnetic field. So if you had a really high power magnet, you could shrink it down. And so let's do that milestone first. If we prove that out, then people can see the path to what a commercial fusion reactor looks like. And lo and behold, that opened up the Series B, which was 1.8 billion. The other thing I would say for de-risking is, if possible, focus on things that you can scale out instead of scale up. So if you have something that's working at some level, there's a temptation to go scale that up in size, and some things don't scale up very well, or you have to build it to really know if it's going to work. If you have the ability to scale it out, basically do 10 of those and put them together and then start making product or whatever it is that you're making, that's going to be easier for an investor to wrap their head around. Now, the economics may not be as good versus the scale up version, but that'll be potentially helpful. And then I'd say there's one other thing, which is there are now entities that can help on first of a kind, or at least nominally we'll say that they can help, which is encouraging. Breakthrough Energy Catalyst just formed and just did their first grant into LanzaJet as an example. The group
Mhm.
formed to basically help companies get over the hump and help to project finance first of a kind plants. There's a first movers coalition that was formed within the administration that was gathering up kind of demand for new things and has a demand set of customers there. Not yet clear how they're doing the supply side, but that's at least the demand signals that's there. And having a customer sign up and really paying dollars, paying revenue to a company,
Mm.
it's certainly one of the key criteria that any investor is going to want to see, that people are not just doing pilots because you're giving them stuff. They're actually paying for it, solving a real need. So those are just some thoughts on maybe a pathway to getting the first of a kind. And obviously, when you talk to Jigger tomorrow, I think what he's doing at the loan programs office is fantastic. The big, great benefit that they do is they do a deep diligence on a
Mhm.
project. And when they say a loan will flow, that's a strong signal to the market that this has been looked at, it's been diligenced. Experts have said this is likely to happen. So that's an incredibly important role as well.
Definitely. I was smiling pretty intensely earlier because you mentioned like scaling out versus scaling up. And this is something that came up yesterday when we were talking about scaling down to scale up, right? Where are there
Right.
modular systems that make more sense in the context of distributed energy production, specifically distributed low carbon energy, where we can start thinking about a future of industrial decarbonization specifically that disaggregates from having a massive natural gas power plant and gigawatt level systems. Really fascinating to hear that kind of come back around. And then I also really like the valley of proof and figuring out what proof matters to your customers, right? I think that's kind of something essential. I have questions on that I'll reserve for later in the context of Commonwealth. I appreciate you walking us through all of the different stages that founders should be thinking about. I wanted to focus it a little bit about the topic of energy access in the context of electrification in a more global sense beyond the bounds of the US and thinking about countries that might be earlier in their journey towards decarbonizing their grid, decarbonizing industry. It's something that should concern all of us when we talk about the energy transition away from fossil fuels, is talking about who will be able to access these renewable resources. I guess this is a two-part question where was that thesis featured at TPG about energy access beyond in other economies? And then how are you thinking about that with Commonwealth Fusion?
Yeah, that's a great question, and it's one that's important. And the energy access, I would say, could fit in or be part of this environmental justice idea as well, which is basically that many parts of the world will be suffering the first and hardest consequences of climate change, and yet they have had, frankly, nothing to do with it. They did not put the emissions into the air that's now causing drought, floods, fires, and so forth. And so these are vulnerable populations. And within industrialized economies, it tends to be that some of these communities are near those parts of our energy infrastructure that tend to spew out bad things, dirty air, toxic things. And so the idea of can we help those communities as we embark on this transition, I think is incredibly important. But on the energy access piece, from back in my time at Google, I've been taking a close look at energy access, had a team that was really focused on that, and very encouraged that some members of those teams are now CEOs of companies doing energy access in emerging markets and really helping to make that happen. But it's an incredible challenge when you've got roughly 600 million people that really have never had access to electricity, the bulk of them in sub-Saharan Africa. And it's a difficult market to penetrate with a technology a large scale. And so many of those efforts are related to more off-grid solar opportunities. So to answer your question, at TBG, we did look at energy access opportunities. We talked to several companies, whether it was solar, microgrids, extensions, even some cleaner fuel distribution systems. And so those were interesting opportunities, but we didn't find something that fit what would be a natural for TPG at the ticket size and the scale of where we could help. We didn't execute any investments in that space while I was there. We did have some smaller funds that we were kind of participants in that did fund some of those things, but within TPG Rise specifically, we didn't do anything specific on that. Within Commonwealth, I would say it's an interesting aspect to fusion power. One of the beauties of it is that you could put it anywhere. It doesn't rely on any fuel system. I mean, the fuel basically can come from seawater for deuterium and lithium, which then breeds tritium. So these are things that are in very small quantities compared to the power that you're getting out. So in essence, you are completely disassociated from a fuel chain, which means no country, no party, no actor will control your destiny. You don't depend on some commodity price that could swing depending on how the geopolitical forces go. And it doesn't rely on local wind or sun or anything. So you can actually put these plants anywhere with a supply chain that's not controlled by any bad actors. And you could have what, in essence, is almost unlimited, clean, abundant, affordable, if we get the cost down, clean power. And it's baseload power. So that even for those markets where most of the people getting access to power or trying to get access to power that don't have it today are in more rural areas, and so you may not have baseload power that can get transmission and distribution out to those locations. For those economies to grow, and with the massive movements towards cities and urbanization, there will be demand for significant amounts of baseload power. And so this is an opportunity where you can actually put a fusion device at a place where people may have not had access to electricity. You still need to build out transmission and distribution systems, but you can do it in sizes and chunks that are much smaller than the traditional nuclear plants of several gigawatts. Here we're talking a commercial reactor based off of Commonwealth Fusion Systems would be in the several hundred megawatt range. It's still large, but it's small enough that it may not be distributed as you've been talking about, distributed like rooftop solar. We've invested in many companies doing that, but it's at a scale that can be deployed everywhere and anywhere. And it's actually one solution that can scale to the size of the real challenge, whereas other ones have constraints, whether it's supply chain or land use or what have you, or availability of resource.
Interesting. Yeah, I'd imagine there's also a conversation around talent here as well, where scaling these new technologies into new markets enables a kind of new workforce as well. Is that something that you think about in terms of deploying Commonwealth solution globally? Are you thinking about who's going to be installing this? How do we get those people up to speed?
Absolutely. This is one of those things too that it becomes a local source of energy. It's not being imported like importing a fuel basically can enable communities to control their own destiny and to have a workforce that then learns how to run and operate these units. It is an important element, I think, and building out the workforce. By the way, I've been encouraged a lot by things that have been happening with respect to climate and sustainability over the last few years. I mean, people in the industry, you probably know, have been pinching themselves over the last few years. Like, oh my God, the world has finally woken up to this massive challenge and massive opportunity. And now you're getting a proliferation of companies. I was just at the Breakthrough Energy Summit a few weeks ago, and I think when they first started that off, they were wondering, we're going to embark on investing in climate companies. Are there going to be enough climate companies for us to invest in? And now their cup runneth over, which is fantastic. I mean, and the capital flowing into the space, unprecedented. 5 years ago, you'd never say that, well, capital's not a constraint. Like, no one would say that, but now it's true. There's many, many funds. But the thing that's getting back to the workforce development, the thing that has gotten me most excited is the talent that's coming into this space. And there's always the passionate people coming out of undergrad or grad school. Like, I want to work on something that's really meaningful. When I ask people, why would you work in climate? The right answer is, why the heck not? I mean, it's the biggest challenge of our generation. It's the biggest opportunity. You can feel really great about solving this massive challenge. There's so many sectors that you can work in. And oh, by the way, these markets are marked not in the billions, but in the trillions. Like, why wouldn't you do that? But then it's also that people have been successful in their early careers doing things like with Commonwealth. We see this people coming from SpaceX and Tesla who've done really audacious things, have proven that they can do it. And so they have a belief in doing big things and have got that from experience, but then a passion to solve one of these huge problems. And seeing that talent come over is invigorating, exciting, encouraging. And so I think the more we can do that around the world, like, people can feel really good about what they're working on because it's solving a huge challenge and doing so successfully with these companies that are deploying these new technologies. I think we'll all be better off.
I think the positivity is also what surprises me the most. Any community gathering around climate is, despite the daunting nature of the problem, everyone is kind of fired up to do the right thing. I'll keep beating that drum until someone stops me. I think before we move away from this topic, specifically around energy access in the context of Commonwealth and TPG, I'm wondering, have you had any out of the box ideas on how to work towards this climate equity and energy equity problem? Because I think I'm really hopeful for a future where Commonwealth can provide that kind of energy access to folks, but obviously that's maybe 5+ years down the line. Is there something more immediate that you've thought about or seen that would make sense to solve the problem?
One challenge with Commonwealth with CFS is we're not anticipating to have a commercial reactor or commercial fusion device providing power on the grid until the early 2030. There is a host of new technologies, and not even new technologies, just technologies that have been proven that are getting deployed. And I think that you'll hear many people say, well, we have the technology today, we just need to scale it. And this is one thing I think that Jigger would say if you ask him tomorrow. He's a big proponent of, we have all these things. We just need to scale them. I think he would say getting $1 billion industry off the ground, you need about 100 million to get it going, and then you're off and running. There's many examples of that. I mean, solar and wind now are the cheapest form of energy in about two-thirds of the world. They're cheaper than building any other new source of power. In many cases, they're actually cheaper than running an existing fossil-based plant. Now, with what gas prices are doing in places like Europe, it is by far cheaper now to build a new renewable plant than it is to operate an existing plant. That's amazing. 10 years ago, people wouldn't have probably guessed that. You can deploy that, but you start getting into challenges of what does it mean to deploy a significant portion of your power coming from those sources. You need firm power. You need it not when it's available, but when you need it. Then there's the benefit of having longer storage. There's a benefit of having control of the grid edge. It's not just supply that's built to meet demand, it's demand that then can morph to meet supply, which is fascinating. I'm still on the board of one of our investments at TVG that does energy efficiency and carbon consulting. Energy efficiency, it's always been the first and best use because it pays for itself. I remember the McKinsey carbon abatement curve. Like, most of the things on the left side of that curve, the things that fall under the $0, i.e., they pay for themselves, are efficiency. There's challenges, obviously, depending on the stakeholders, agency issues, but there's a lot of technology, a lot of things that we can just keep doing already. We shouldn't be waiting around fusion. I'm going to be doing what I can, and the team's going to be doing what we can to deliver that as quickly as possible. But there's a ton of solutions that you can use today that can start driving down that curve.
Yeah, and I think there's a nuance to what you said around the technologies exist, but the full product or the full solution is maybe something that still needs to be tailored for certain communities, certain geographies where I can understand that where maybe it's a mix of an efficiency-based solution plus some renewables coming onto the grid with some grid edge control, but that product is something that maybe still needs innovation and still needs like the funding to kickstart those developments, I would imagine. I think I'll move on now to a question that almost harkens back to hopefully your time at Google. I'm curious when we think of the amount that Google has invested and continues to invest in renewables, what sparked that initiative for them? And was there anything non-obvious that kind of got the ball rolling for the kind of energy program within Google?
So I joined Google in 2008. And at the time, Google had an ongoing effort that was really started before I got there called RE less than C, meant renewable energy less than coal. They love to have this little cute little equation that defined it. That encompassed a number of efforts, and some of those efforts turned into bigger things. One of the things that happened in 2007 and 8 is Google deployed what was at the time the largest corporate solar array on their rooftops. Now you're going to all jump back and say, wow, that's huge. I'm just kidding. I'm being sarcastic. It was like 1.7 megawatts. It was tiny. At the time, it was the biggest ever. And as we had done that analysis, and this is, a group of folks that were at Google before I kind of got there, it was already on the roof. They realized the economics for this penciled out for us. And this was the biggest in the country. Can we not do more? Can we not do things that are even bigger scale? And we realized that A, we had a big balance sheet. B, we had tax capacity. I mean, we were paying taxes, so we could invest when we get returns back in the form of tax credits, which was how the US is set up with ITC and PTC. And we thought, well, we can do things at much bigger scale. And so we went through this journey of getting the right approvals, making sure we were set up to do this right, hiring in the team, and looking for quite some time at the kinds of investments that we could do. And so this wasn't the procurement of power for our data centers. It was actually just investing in projects and helping to show that if you have capital and appetite, you can help make some of these things happen. And so that's where it really started. But the criteria we would use, it had to make economic sense. This wasn't something we were doing just out of the goodness of our hearts. What we wanted to do is we certainly wanted to deploy larger scale renewable energy projects, but a bigger and uber kind of goal is to show that it can be done profitably and to show other players like us, like Google, that you can actually make good money doing this while actually putting more clean energy onto the grid. There's kind of a halo that comes from that, which is great. But in essence, you're just continuing to help build out more clean energy. And that was something that at the same time our data center team was doing their procurement, finding the first procurement for renewable power. So all these things were happening at the same time. And I think we were very encouraged that we were able to find really interesting projects to invest in, ones that made good economic sense. Some of them were the biggest of their kind. We invested in the biggest wind farms in the US, we invested in the biggest solar power tower in the US. And then we actually realized that we're doing a lot of good stuff in the US. And then my team looked at doing some of those things outside the US. So we invested in the largest solar plant in Africa. We made a commitment to invest in the largest wind farm in Africa. That investment never actually flowed because of other conditions precedent that weren't met. But we were super excited about participating not just in an off
Mhm.
taker of energy, which Google has become a huge participant in and actually has driven even further down the path of even making a commitment to 24/7 clean power. It's actually been amazing, and I applaud them for that, but even just investing too. So we were participating in many ways in the ecosystem, hopeful that other companies might also do the same thing because it's going to be helpful as many people, as many corporates can as possible to help bang the drum for we want access to clean energy and we're doing everything we can to make that happen. And if everyone's banging that drum, that's a demand signal.
We're almost coming full circle to the first part of our discussion about how do these things get funded? How should founders think of their funding journey? And that critical demand signal is sounds like Google really laid the groundwork specifically for the renewable technologies around wind and solar that you mentioned. I have so many questions, but something that you've mentioned twice now is this notion of Uber goals or going from late stage to mega stage. And I'm wondering, just on a personal level, is that something that you chase? Are you looking for projects that can potentially go to the Uber or mega stage? And is that something you're seeing in Commonwealth now?
The short answer is yes. This has been one of those things when I look for a job or a job opportunity. I mean, I'm blessed to have great experiences, have worked with great teams and been successful. And one of the key criteria I look for in a new job is the ability to have impact well beyond what I am doing or even what the firm is doing. This is frankly one of the reasons I joined Google, because I thought, wow, this is a company that has literally changed the world. And if it focuses its efforts within this space and climate, sustainability, renewable energy, it could also change the world for the better. It was the reason I joined TPG to be the energy sector lead for the largest impact fund that was raised. The ability to show capital providers, our investors, there was the traditional question, which is like, oh, I don't want to do sustainable investing because I'm going to have to give up some of my return, and I can't do that as a fiduciary. Well, if you show them, you can actually make the same return and with a big capital A and show all this impact. That takes away the argument for why you wouldn't do it. In fact, you can flip the question around and say, if that was true, then why wouldn't you do all your investing like that? So if you can bring in more LPs into the space, say this is a place that you can invest, that you don't have to suffer returns. In fact, you get
Mm.
benefits. And our argument at Rise is that these companies that are focused on big problems can attract the best people, can attract the talent, have passion, and through their business model are solving a problem. That's a fantastic combination. And so the idea was that that would be great for TPG Rise, it's great for TPG, it's great for impact investing, but it's great for the world. And so the idea to have much bigger impact. And then Commonwealth's just another kind of closing the circle. There's few other companies I can think of that could have just such an enormous knock-on benefit. I mean, there's the direct benefit of low carbon, zero carbon base load power available anywhere with no real fuel ecosystem you need to worry about. But it's also enabling clean heat if you need process heat for some of the industrial sectors that are much harder to decarbonize. It has energy justice kind of implications because you can put these anywhere. In fact, you can even swap out from an old existing fossil plant, just put in a fusion reactor, a fusion device, and have zero carbon power and reuse some of that infrastructure. There's incentives to do this in some of the recent legislation. I would encourage people to think about in your next jobs, like where's a place where you feel like you can
Mm.
go and you can just feel like no matter what, if you are successful, the impact that you can have goes so well beyond what you're doing that you just feel great about doing it.
Super inspiring message. And again, going back to why work on climate, I think that has so much to do with it. Everyone can feel good about doing these sorts of projects. I think there's also a question implicit in what you were working on at Google. Was Google able to be a steward for other large corporations looking to invest in renewable projects, if not for decarbonizing their own footprint, but also for potential returns just from a financial perspective?
One of the things that we tried to do was encourage other companies that were like us to do similar investing. I would say when I joined Google, when we were doing this project investing, it was a time where if you had a good idea and you had a team that could go execute and you could make a good case, and that it wouldn't just be willy nilly here. You'd have to actually show why this made sense to do and how you could do it. Whereas in many other companies, they would say, why would we do that? That's not core to our business. Google would say, why not? If we can do that and it makes good financial sense and it's a great thing that we can be doing as an example for others at the same time, well, why not? So what we try to do is we try to chat with a bunch of other companies. I mean, I know our treasurer at the time called up treasurers of many other companies and saying, we're doing this kinds of investing and we think it makes sense to do. I don't think we had a lot of companies jump on that bandwagon at the time. This was relatively soon after the financial crisis back in
Mm.
2008. So, understandably, people were focused on their core business. But I would say it's been incredibly encouraging to see the proliferation of efforts across corporates and the commitments, the net zero commitments. And we'll see what happens as we get closer to those dates. And it looks like it may be hard to achieve some of those goals. But I'd say many corporates are being very aggressive about what they can do. And that's not just in investing in the space. I think investing in space, it's not traditionally what corporates would do, but now there's a bunch of corporate venture arms, TDK as an example, where they're actually seeing, hey, let's invest in some of this innovation early on. There's opportunities here. But there's also, I'd say, the big space that really proliferated or has grown dramatically is the corporate offtake of renewable energy. That's now gotten to multi-gigawatt scale. When the industry went past 1 gigawatt, that was a big deal. And then suddenly, boom, it's in the tens of gigawatts. So it's fascinating to see how that's grown. As I mentioned earlier, the commitment going to not just we're offsetting our power use with renewables, but we're actually going to go 24/7. I've seen this continued increase in the level of commitment and what companies are intending to do to be very, very
Yeah.
encouraging.
I have a last question about Commonwealth specifically. I think 24/7 clean power is kind of a nascent conversation in the climate and renewable space. And I'm just wondering, can you give us an understanding of what we mean going from purchasing renewable energy credits or saying that you're going to invest in a renewable energy project versus moving towards 24/7 clean power?
So I would say the way that corporates have been claiming zero carbon in their power use has been through a mix of contracts and procurements of renewable power. In the best cases, you can actually procure directly. Like I will buy power from that plant, it will get transmitted over to my site and I will use it. That's relatively rare because you need the right location, the right agreements on the transmission and distribution of that power. So what happens more often than not is a contractual arrangement where you're buying that power and then you're also getting power from somewhere else, and then you're taking the RECs off of that power and then selling it back into the node where you can sell it. But it allows a company to say, we're basically procuring renewable power for our
Mm,
use. What's much harder is to say, we actually want that power delivered from a site that's next to or near our own usage. We don't think that we can call it a data center in a very dirty and low cost area and then we'll go buy RECs from someplace in the Midwest where wind farms are spewing out power. And maybe originally they were built and not financed where the production tax credit was a big deal. So I'll go buy those RECs and then I'll go build my dirty plant and I'll offset them. And wouldn't that be
mm,
great? So the intention of 24/7 clean power, and obviously there's an organization dedicated to this now, and Google has been a leader here, is really that we want to have not just offsetting of power across a year, but we want to actually make sure that when we are using power 24/7 across the daily cycle, we're ensuring that we're getting renewable energy delivered on those
gotcha.
timescales, not just across the year, but across hours. And it's much more difficult. I mean, things like storage make it more
Hmm.
possible. Base load power makes it more possible. So fusion could be a big solution here for this, but it's a much harder challenge. And so I applaud those companies that are focusing on that because if everyone did the offset thing, like that won't work. If everyone did the 24/7 thing, that
Yeah.
works. That means the whole energy system is delivering 24/7 power, clean power to all the users.
Almost like due to the lack of resolution in renewable energy crediting today, we're actually not creating the most additional kind of renewable system we could be. In the sense you're mentioning, like a renewable energy credit from a place where there's already a lot of clean power is not the same as a renewable energy credit from a place that was quite dirty. And this new project is a huge effort to decarbonize. And yet they're all treated the same at like the megawatt hour scale right now, too, right? That's how you purchase them. It's not really
Yeah.
granular. Fascinating. That's probably a whole hour-long discussion in and of itself. I think I want to circle back to Commonwealth, and then we'll take some questions from the audience. And so this is probably a good time to pause and remind the folks who are listening in that you can go into the Q&A section on the top right-hand corner of your chat box, ask some questions. We'll get to them shortly here. This is a two-part one because you also mentioned just now that 24/7 clean power also has business model implications for Commonwealth Fusion. And I have questions around going back to how do you build a product out of some of these technologies? How do you think of building a full product for Commonwealth? And maybe what's the first initial iteration? You mentioned that there's something around magnets. And then does it become not just a fusion reactor, it also becomes a way to model how it interacts with the grid, a way to purchase the renewable energy credit value of that project? Is there something broader that you're thinking about beyond just the fusion reactor itself?
The high bid intention is to commercialize this zero carbon baseload power, this fusion based power. And so part of that is understanding what is the product that actually gets deployed, who are the customers and who's paying for it, and who are the partners that are involved in bringing this to fruition. Right? These are all the things that I'm going to be working on. I'd say the thing about fusion is, again, it can provide that baseload power. Depending on what the demand signal is, you could ramp up or down this device. You probably wouldn't ramp it all the way down to a very, very low level, but it's kind of variable in the way that a gas turbine can be variable. It doesn't require you running at peak power and peak efficiency all the time. And a lot of these things, just frankly, are going to be BD as we figure these things out and what it means to build a commercial fusion device. The first thing we're doing is proving out that you can get more energy out than you put in. That'll be a massive moment. I think in some of the notes I've sent to people or I've said to people, I believe that that's going to be a moment marked in literally in human history. Humans have controlled star power. Like that's going to be amazing. But that doesn't mean that the next day it's commercialized, right? So the questions you ask and how would this fit into the grid systems? Who are the customers? What would they be buying? Those are all questions we'll be resolving and doing
Mm,
iteratively with some of those customers. The other thing that's great about fusion, it's a great source of high temperature heat. So have heat in the 600 C or so that can be deployed and provided to processes that need high temperature heat. So that's just another benefit. It's not just electricity production, but it actually can help to decarbonize some of those things, some of those processes that can use heat. And sure, you could do combined heat and power units. That's a more delicate dance on when is power and when is heat needed and at what ratios. And so that's something else we'll be looking at. But there's a whole lot of work to be done on the commercialization here. And we're super excited that we're affording ourselves the opportunity to have that
yeah.
conversation because of what we're doing to prove out that the physics with the high powered magnets actually can work. And one last thing, you mentioned the high power magnets. We're actually looking at other applications for those high power magnets. The fact that you've built and demonstrated the highest power magnet, that opens up other opportunities too. Beyond fusion, certainly, and tokamak reactors, magnetic confinement certainly benefits from a high power magnet. There are other things too that can benefit from a high powered magnet. And so we're exploring some of those things too.
A lot of commercialization work, but it sounds like they hired the right person. So we'll check back in a year and maybe have a follow up. Okay, we're gonna get to some Q&A, and apologies to the audience. I ran a little over on our questions here, but first one is from Tina on our team. CFS has done an amazing job maturing the high temperature superconductor tech. Is a supply chain for the balance of plant developed and ready to support fusion at scale?
Yeah, we are definitely focused on the supply chain. We have a pretty amazing team that's been put together to deal with supply chain or think about supply chain, not just the guts of the fusion part of the device, but also the commercialization part of the device. Spark is our acronym for the kind of the proof of concept of the fusion device that'll show net gain, net positive energy gain. Arc is the name of our commercialized fusion device that's putting power onto the grid. And so we do have folks who are working every day on supply chain. And one of the key elements or key innovations is actually that high power magnet. So we've developed some of our own understanding. What is the design of those magnets? How do you manufacture those? We're getting that industry, high temperature superconducting tape, like that industry to a scale that can support pulse of fusion plants as a tall order. One we're marching
Mhm.
on though.
Appreciate that insight. The next question comes from Victor Karamalis. All utility projects have been traditionally priced in dollars or pounds or euros. How are you looking to price projects in emerging markets? I think I will also maybe put an addendum on that one. Typically, we talk about a dollar per kilowatt or euro per kilowatt or megawatt. Are there other ways to describe the cost or the pricing of these systems that make more sense for different markets?
When pricing for things in emerging markets, these are just ways of talking about what's the monetary figure. It's dollars, it's euros, it's rupee, it's whatever. I think it'll come down to driving down to get to the lowest cost, levelized cost of electricity. And so that depends not just on the capital cost, but on the utilization of the plant and therefore what's the amount of energy being produced by a power device. We don't have any thoughts on like we're going to define something in a rupee versus any other currency. What I would say is when we're the first plants that we're planning to deploy, and we're looking at siting of some of those plants right now, first commercial plants. We're building the fusion device in Devens, Massachusetts right now. It's under construction, but we're also siting the commercial plants now. We're focused on those places where we will be able to build rapidly and at scale
Mm.
quickly. And so, depending on where that is, it will depend on what currency we're talking
Gotcha,
about.
gotcha.
Yeah.
Another question from Wang. Could you comment on your opinions on how to determine whether a project should be scaled up or scaled out?
Yeah, it's a good question. I mean, obviously, gave the advice you should think about where you can scale out. Usually, the intention of scaling up is to get to some unit economics that are
Mhm.
better because by doubling the size of whatever your bioreactor, it may not cost twice as much as the half size reactor. So the idea is you can get to things that are bigger scale and therefore you're saving as you get to those bigger scales. The challenge for investors is if that then induces changes in the process or unknowns in the process. You may have something very dialed in, and then as you scale up, maybe some of the work that you've done is less relevant because now you have different dynamics in that larger plant. I think bioreactors tend to be an example here, at least in my understanding, where the dynamics can be very different as you grow and scale. What I would say is if the unit economics support scaling out, so multiply what you're doing times 10 with maybe improvements, but something that's not too far afield from what you're already doing, and the unit economics support you doing that and earning revenue with a cost structure that makes sense, where you have got some unit economic profitability, that might be a better first
Hmm.
path to go, and then get production up, and you could in parallel, if you've raised enough money, design the scale up version where the unit economics can drop even
Uh-huh.
further. If it doesn't make sense to scale out, if your unit economics are going to be not interesting, like that just shows you can do something that's not profitable 10 times, that doesn't make as much sense. So the unit economics have to make sense on the scale out as well. They may not be as
Yeah.
ideal, but it's going to be a lower risk
Yeah,
path.
there's almost a sensitivity here where the situation we're in today, where we have a number of incentives in the market that can actually support unit economics at a smaller scale. We need investors like yourself or people with industry knowledge like yourself to help founders think about right now economically it might make sense to scale out versus scale up, right? Because they're right incentives to go do a few plants, but then your advisors in the background probably have to be helping you think through 10 years from now, how can we get the show on the road towards a scaled up system just now, right? I guess that balance is helpful advice. Next question here, and this might be our last one from Manuel Diaz. What would be the role for small modular nuclear reactors in the industrial sector? And I'll expand that to fusion. So mentioning steel, cement, oil, and gas.
I think that there is a role, and so these are considered harder to decarbonize industrial sectors. There's a range of ways that a small modular reactor or a small fusion reactor can help here. One is just the provision of abundant baseload, low zero carbon electricity. Some of these processes are based on using electricity, and there's some newer processes that have shifted how you would do some of these from a more certain chemical reactions to something that's more electricity driven. Within steel, there's, for example, ways to reduce using hydrogen that will allow you to shift to a lower carbon source of fuel or inputs. So if you have zero carbon hydrogen, you can do hydrogen based reduction. You tend to need a higher quality source of input, so scrap or other things for steel. But there's even innovations happening now where you can take pretty low quality inputs, use just electricity, and convert that to molten iron and steel. There's one company doing that right now. It's in the Breakthrough Energy portfolio, but that's a place where just the electricity can drive low carbon steel across all inputs for steel. So it could solve it for the entire industry. So that's just electricity. But then, as I mentioned, fusion and small modular reactors could have also process heat. So for some of these processes that they rely on heat for another part of their process. Traditionally, how do you get heat? You burn something. And so avoiding the burning of something to instead the fusing of something can be a big gain because it's zero carbon. And then I'd say the other bit here is even just when you talk about if hydrogen is a source, an input, for example, in fertilizer, you could be generating zero carbon hydrogen through the use of electrolysis and zero carbon power. That's just one other way of doing it. There are some hard to abate sectors where the process is a chemical process because of the chemical composition, and you're not going to be changing that in some ways. And so that's harder. So if you need hydrogen, you need hydrogen, but hydrogen can be made so it's zero
Mhm.
carbon. So there's a bunch of ways that these can help out the industrial processes.
Totally fair. Okay, this last question, we're almost at time. This is a super rapid fire one. What are the top three challenges for fusion commercialization?
I think it's still proving net energy gain. That's a huge one. I think Commonwealth is on its way to solving that. And then it'll be developing the scale, the supply chain to meet the scale, to meet the
Mhm.
challenge.
I think that leaves us with a good idea of what's next for the problems you'll be solving. I really, really appreciate your time, Rick. This was an awesome session. Sad that that's all the time we got, but appreciate you being so gracious and joining us today. Really wonderful, wide ranging discussion, and I think the whole audience appreciated the insights that you could bring to us. And really looking forward to see how you and the CFS team can lead the way for us to a low carbon future. So thanks again, Rick. And
Thanks, Mark.
I'll take one last note here for everyone in the audience. Thank you for taking the time to hang out with us on the second day of Energy Week 2022. Encourage you to stay on for the next session, which is a great panel on the future of emerging market electrification, as well as a fireside chat with Chelsea Sexton from the LPO, one of Jigar Shah's collaborators. And then we'll have a panel this evening on EV charging and infrastructure. And then log on in the morning again to hear me chat with Jigar Shah, the director of the DOE LPO. I'm sure we'll almost have a follow-on discussion to what we just talked about with Rick today. A huge thank you to everybody, and I would really love to give a shout out to all of our sponsors and supporting partners for Energy Week. We couldn't have gotten the word out without you all. So again, thank you, Rick, and thanks everyone who joined today.